you've got to take a view on Europe to have a view on the rand. We had the European summit yesterday ratifying an agreement to have tighter oversight over regional budgets. We had some interesting debate here at the desk before you joined us, where Mark, downplayed some of the importance of Europe and the kind of contribution it makes to global GDP at this stage and the contribution it makes on that level. What's your view on Europe and all that's playing out?
Well, our view on Europe remains cautiously optimistic. Certainly there does seem to be some progress, particularly with talks in Greece, and there has been that outcome from the EU summit where there's been a move towards closer fiscal coordination. But in the short to medium term, we still see scope for some flaring up in that sovereign debt crisis. It looks at the moment like markets are largely ignoring the underlying fundamentals, and part of those underlying fundamentals that we expect that the region is going to experience a recession this year. That is going to put pressure obviously on national budgets as well. So we don't think that the steps that have been taken so far have actually addressed the underlying causes of the crisis. So we still remain bearish on the region as a whole, although certainly there do seem to have been some positive developments over the last few days.
Yeah, it's but those positive developments that have seen the rand gaining some ground. The rand's gained 4% against the US dollar. Are we looking more at a case of dollar weakness or rand strength at this stage?
I think particularly when it comes to the rand-dollar relationship, it is largely a case of dollar weakness and not necessarily related to developments in Europe. What we're seeing is quite a lot of global liquidity that's currently in the system, partly due to actions by the ECB, but then also related to comments made by the Fed last week. So that really seems to be the story at the moment as far as the rand relationship to the dollar, where this flood of liquidity has sparked some optimism on markets, and that's keeping the dollar suppressed, and the rand is starting to strengthen quite significantly.
Looking at some of the unfoldings on the local arena on the data front, just this morning we had December's credit growth come in at 6.21%, where consensus was for 5.85%. Overall impressions of those headline numbers that have filtered through?
Well, certainly the uptick in credit extension is positive for the economy, but again, not a particularly robust number. And we also have trade figures out later today. So on the whole, we're still expecting that to confirm the fact that the outlook for the economy remains quite weak, that growth is quite weak. And so nothing spectacular today that should really count in favor of the rand in particular. The prognosis for growth domestically is still quite depressed.
So nothing spectacular this morning. There was nothing spectacular yesterday as well, where we had data showing a narrowing budget deficit, and it shows that public finances are expected to be under pressure over the next few years, Nomvuyo. So what's your outlook for the South African economy?
Well, as I mentioned, our outlook is quite poor. We're only expecting growth of 2.8% this year. We expect that growth came in at just 3.1% last year, and we're not even seeing an uptick in 2013. It should tag level at about 2.9%. So really over the medium term, we're not seeing much growth dynamism come through from the local economy, and of course that is going to filter into government budget, and that's going to make this February budget quite an important one. I mean, it's always a highlight on the local calendar, but I think this year more than ever, people are going to have, there's going to be quite a bit of pressure on Minister Gordhan, particularly in light of developments from ratings agencies.
Absolutely. We've had some negative rhetoric come through where we've had, concerns about the economy being highlighted. Nomvuyo, just how much bearing has these ratings agencies' comments had when it comes to your sentiment at this stage?
Well, they haven't had that much impact on sentiment. I think it came as a bit of a surprise because government has been fairly consistent in terms of how it communicates its budget decisions. We have the February budget, then we also have an update in October, and typically there aren't surprises that come through in October. The government has been quite careful on that score. So the reaction from ratings agencies we still see at this point as being largely a warning, but of course it still has quite, it's of quite important of large importance and significance to South Africa. So that's why this February budget is going to be quite important. I mean, Minister Gordhan will have to balance the conflicting objectives of trying to narrow the budget deficit, which is what ratings agencies are calling for, but also trying to support the local economy in the face of slowing global growth.